Hi everyone, welcome to another Mutual Funds episode of COL Conversations. I am Mark Ilaw, Head of COL Fund Source, and today we'll be discussing the investment strategy and process behind the best performing equity fund in the industry right now, the ATRAM Alpha Opportunity Fund. And to help us get to know the fund better and understand the reason how they are able to deliver such outperformance, joining us in this episode is the Head of Equities Research at ATR Asset Management, Mr. Elle Jamil. Hi, Elle. Thanks for being with us today.
Hi, Mark. Hi, Mark. Thanks for inviting us, and thanks for the opportunity to share about our fund.
Yeah. So, Elle, talking about your fund, I think some viewers may not know this, but back in 2015, when we launched the service, it's actually one of the first funds that we have in our shelf. But like I said, maybe some still don't have a full understanding or appreciation yet of what the ATRAM Alpha Opportunity Fund is all about. So let's start with that, Elle. Can you give our viewers a brief overview of what this fund is about?
Sure. Okay, so the ATRAM Alpha Opportunity Fund is one of ATRAM's four distinct strategies in equities. So what sets Alpha Opportunity Fund apart from all our other equity strategies is that it invests in small to mid-cap companies that are both capable of growing faster than market pace, but still meeting ATRAM's minimum risk criteria. So ATRAM Alpha Opportunity Fund already has a proven track record. Over the last 5 years, it has beaten both the PSEi and the MSCI Small Cap Index and all the other PH equity funds. Because of this, the Alpha Opportunity Fund has been consistently sought after by retail clients. And as you have mentioned, it is one of your first fund products, right? The idea of a diversified equity portfolio is both appealing and necessary in today's world. And we think that the Alpha Opportunity Fund is a perfect fit in that kind of goal. Now, one of the distinct strategies also of Alpha Opportunity Fund, since we already focus on small to mid-cap companies, is that we pick the future blue chips, right? So blue chips, not just in terms of size, but also an inclusion of like major indices. So not just our local PSEi, but also MSCI or FTSE.
Yeah, so very great points, Elle. But siguro just going to the name of the fund. So a lot of clients are actually wondering, what does alpha mean in relation to the design of the fund?
Yeah. Okay, so alpha is sort of a technical term in finance jargon, but in very plain terms, it is the return generated above what the market is giving you, right? So when we say the market, we usually refer to our PSEi, the Philippine Stock Exchange Index, right? So whatever is above that, whatever the portfolio manager can generate above that is alpha.
Yeah, so speaking of that, do we have a track record of your fund versus, let's say, the PSEi as a benchmark, or another benchmark that may be more appropriate for this kind of fund? No?
Yeah, definitely. So first, let's talk about the year-to-date performance. I think the Alpha Opportunity Fund is returning 14.6%. That's as of September 1. While the PSEi, the local PSEi, is down 5%. And the MSCI Small Cap Index is returning 1.2%. So the alpha is about 12.2% over the MSCI Small Cap, which is the official benchmark of this fund. But you can also compare it to the local PSEi.
Yeah, so I guess as I've mentioned at the top of our interview, it's really outperforming the market, including comparable funds. So, Elle, based also on the overview of the fund, can you walk us through the kind of investment process that goes into the selection of the stocks inside this fund?
Okay, so we have, and this investment process that I'm about to outline is applicable to all equity strategies. So it's not just Alpha Opportunity, but the kind of research that goes into this process is uniform across, and then we just tailor it according to the strategy, right? So first, we have a dedicated equities research team who covers 10 sectors and goes on at least 300 company meetings or visits a year. Now, visits might not be very applicable in the past year or so, right, because of the pandemic and such. But we still try to maintain a clear line of connection between the companies that we cover and us. Our process is rooted in deep fundamental research. So this allows us to identify fast-growing companies, future blue chips, and deep value opportunities. Now, as you may recall from the strategy of the fund, this is very important because we mainly look at small and mid-cap companies, and these are usually undercovered, so that's not a lot of buy-side houses or sell-side houses cover it. In terms of choosing the names we invest in, we take into consideration the growth of industry that it's in, the competitive dynamics within that industry, the position of the company relative to its competitors in that space, the types of regulation that's applicable to the company, the near-term and long-term growth prospects of the company, the track record, transparency, and accessibility of the management, the valuation, of course, and other applicable investment risks like credit and especially ESG. Now, having said that, risk management is also embedded in the process, which again is very important, especially to this kind of strategy, because usually the small and mid-cap companies are still family-owned or are still in the middle of transitioning or professionalizing their management. So they may not have a dedicated investor relations team yet, or you may run into common governance risks associated with these types of companies. And lastly, the portfolio management is guided by more than 50 years of combined experience in PH equity. So it's not just one portfolio manager, although there's a main portfolio manager, but we're also guided by the other portfolio managers, and especially our Chief Investment Officer, Phil Hackett.
One of the things that I noticed here, Elle, is the kind of research that goes into the selection of stocks. And you mentioned here that you do visits to these companies. And I want investors to understand what is the importance of having those kinds of visits, because for many investors, they don't have access to such kind of face-to-face meetings with these companies.
It's very important, especially for companies that, let's say, for example, a company that would have huge plant and property equipment assets, right? Large fixed assets. You actually want the assets to be there. You want the assets to see the assets as functioning, well maintained, right? And also companies that rely on its geographical proximity. So, for example, cement companies that need to be near large infrastructure projects, or property companies, and you see the immediate surroundings of their new projects, right? The demographic that it's in, the per capita that it's in, the development that you're actually seeing, is it top notch? Especially if a property company is claiming to be able to build, say, low cost or economic housing without compromising quality. That's something you inspect, because at the end of the day, these are products that you sell to consumers, and the consumers are very discerning, right?
Yeah, great. And another thing that I want to delve into, Elle, based on what you said, is your focus on growth companies, or the smaller ones. As you said, some of them are family owned, right? They don't have IR officers at this point. Can you help define, by looking at growth companies, how do we distinguish among the 270 plus listed companies, which ones are the small caps, which ones are growth oriented, things of the nature?
So at least within our metrics, right, we identify large caps first at the top end, so that we know we already have some idea of what we don't usually look at, or it's not really within the strategy, are those companies with market capitalization of north of 150 billion, right? And the mid cap would be usually between 50 billion to 150 billion, and small cap is less than 50 billion. So just to give you some sort of idea, right, of what a 150 billion company looks like, in the top end, you have something like the SMs and your Ayalas. At the bottom end, you have something like Metrobank that's about 200 billion, right? But just below that threshold, crossing into the mid-cap portion already is Pure Gold, which still has a market cap of about 120, 130 billion, right? But also on the lower end of that mid-cap threshold is Bloomberry. That's about 60 to 70 billion in market capitalization, but it's still within the index, right? And then something less than 50 billion would usually be your Wilcon. You still have your pizza, right? Your Shakey's.
Yeah, and the fund is again focusing on the small to mid cap space. So what benefit do you guys see at ATRAM in focusing on these smaller companies versus the larger ones, the blue chips?
Usually these companies are still in the rapid growth stage of their business cycle. So it's really much easier to grow, right? So for going from 100 million in sales to 200 billion in sales, it's much easier than going from say 10 billion to 20 billion. And we're not just talking about doubling sales. So say you grow your income by 20%, it's already something that's rare or above market. As we've seen in the past decade of the PSEi, the average earnings is about 4 to 5%. We're not just limiting our basket to doubling income, but even just like a 20% growth in income is already considered fast growing.
Yeah, but I suppose, Elle, one day these fast growing companies would also become blue chips, right?
Blue chips, definitely.
Yeah, have there been stocks or securities that you included in the fund before and it grew to become one day really part of the PSEi or the 150 billion market cap?
Yeah. So most recently, actually, we identified two companies that were just recently added into the PSEi index. So one would be Converge, and then the other one is AC Energy, right? Converge, when it listed back in 2020, came with a very interesting value proposition. It's a pure play on fixed broadband. This is a space that's underpenetrated, but also not really affected by the entry of DITO. As you may recall, back in 2020, that was like when you talk about telcos, that was the overwhelming narrative, right? So Converge was already an existing player, not exactly to the size of PLDT or Globe's just fixed broadband businesses. We're not even talking about their mobile businesses, right? They had a good track record of customer acquisition, a good track record of expansion. They were focusing on suburban areas first, and they had a technology that gave them their competitive advantage, which is their micro trenching, right? That's a very technical term unique to Converge, which basically just means that when they lay out their fiber lines, they don't have to dig as deep. So you can imagine that it's more capex efficient and they're faster in terms of rollout. They had a good record in rolling out in Luzon, and then when they came to the markets back in 2020, that they had a concrete plan in expanding to Visayas and Mindanao. And so far, they are on track to deliver those targets. Also for AC Energy, the other one that just came in to the PSEi, it was very interesting because it's a niche market play on ESG, right? ESG is a theme that is increasingly coming to the forefront of investor consciousness. But in general, we're still in the pretty early stages, right? In terms of disclosures, that's the bare minimum. And the second would be adoption, integrating best ESG practices into their business model, right? But AC Energy came out with its promise of 5K megawatts of renewable energy by 2025. So this presented sort of like a unique opportunity for a pure ESG-centric investment, right? Not to say that there weren't any other players, especially in that space, that did not have renewable energy, but it didn't have the same focus as AC Energy and commitment.
Yeah, it's good that you're able to give these examples, Elle, and
yeah.
I think the viewers can have an idea as to how the investment process that you described earlier are translated, yung processes na yun are translated into these peaks. And I just want to understand, these are some of the companies that you included in your portfolio, but at what point within the run-up did you see them? No, was it in the early phase prior to what we're seeing in the chart, or you entered it middle part, or are you in the late stage already?
Okay, So first with Converge, we signed on since the IPO. We didn't sign on with our full allocation because we were waiting to grab some chance just in case it dips, and it dipped right after its listing, like a couple of weeks after its listing. So we added some more. So we were able to ride out its full run, right? For AC Energy, admittedly, we weren't really there from the start. To familiarize the audience also, AC Energy, it used to be FEN, taken over by the Ayala Group, right? At the start of 2019. And we had a hard time envisioning because it was a marriage of two companies, right? FEN still had its legacy assets there, and AC Energy also had its own pipeline. At first, we were just seeing all these corporate actions, merging of the assets and all that. And it wasn't really right out the gates that they were saying, this is going to be a renewable energy company, right? They did a lot of capital recycling, which made it hard to plot out the profitability of the company in the longer term. So capital recycling would be basically like selling down a portion of their assets and then booking some gains. So that made their profits year in, year out kind of choppy, right? So, and as you may know, one of the easiest metrics that we would look at is profitability and being able to plot out the profitability of the company, right? So that made it hard to see AC Energy as early as it was. We also came in somewhere at the 6 pesos range, 6 to 7 pesos range.
Yeah, great. So I think those two examples really explain the reasons behind the outperformance of the fund, in part. I just want to understand also, Elle, for the benefit of our viewers, when this kind of run-up happens to your holdings, do you hold on to them, or if they already hit, let's say, the large cap size, do you automatically strike it out of your investment universe? How does that happen?
So we assess also. It's not like once they cross the threshold of 150 billion, we zero them out. We empty them out of our portfolios. That's also not the case, right? So we just have to assess, right? Do we still have enough runway for growth once we're at these price points? Are the valuations stretched, right? And once we start asking those questions, then we also start assessing, are we paring down our positions since it grew, right? But we want to be consistent with our strategy in the first place, right? And we're also by paring down, by taking profits, I mean, the strategy already worked, right? So it's not like we automatically zero them out. This is public knowledge, or something you can download in our fact sheet. We still have Converge, right? And Converge's market cap is already at least 200 billion.
Yeah, great. So I think, again, it reflects the kind of investment strategy that inherently the fund has. And I just want to go back to the focus on growth, Elle, because based on the examples that you cited, these stocks, ASEN and Converge, our viewers can notice that they belong to different sectors, right? So when we talk of growth, it's not necessarily a sector that we can pinpoint right away. So can you talk us about the kind of themes that you're seeing when it comes to growth investing here in the local market?
Yeah, so we currently have like 3 or 4 main themes in our portfolio right now. So that would be new economy drivers, so the types of logistics, e-commerce, fixed broadband, home improvement, right? The second theme would be reopening beneficiaries. So this would include property, consumer discretionaries, and these names tend to be one of the more beaten up names during the pandemic. The third would be ESG Champions. We have our internal ESG metric analysis, and we place a premium on companies that usually score high in that framework. And lastly would be election play. Now, take note that some of these themes may overlap, right, in some names. Right now, our top exposure is with new economy drivers at 35% of the portfolio. These companies experienced growth even during the crisis and are already above their pre-pandemic profitability.
Yeah, so clearly, the fund is exposed to different areas of growth,
Yes.
right, El? And perhaps to make it really clear to our viewers, if you may, maybe the top holdings lang, can you give us examples of companies that are exposed to this kind of themes that the fund is currently investing in?
Okay, sure. For new economy drivers, I think you can also see it in our fund fact sheet. Would be Wilcon in terms of home improvement, right? Converge still in terms of fixed broadband play. For reopening, I think you can see there that we're exposed in Robinson's Land, a property that's also launching its own REIT. So that gives you already an idea of like how much balance sheet space they have, not just to weather the crisis, but still to take advantage and still continue to perform. For ESG, ASEN is there. And then for election play, Pure Gold is there.
Yeah, I guess based on all of the things that you mentioned, El, it's clear that the fund would have a different behavior versus the index or versus other funds that are primarily driven by our blue chips or the index. So in that sense, what kind of risks should investors be familiar with if this is the kind of focus that the fund has?
Okay. So let me discuss two types of risks. First, for at the company level, right? And that's why I emphasized the investment process that went into researching the names that we do have. First, we try to price in all the associated fundamental investment risks that we would identify at the company level. So may that be ESG risks, management risks, any input risks, right? We try to price it in already all to the target price of the company. And for companies that have significant ESG risks beyond our threshold, because we do have a threshold in our ESG risk assessment, we draw the line and say that these companies are non-investable. We're already looking at small to mid-cap companies. You can just imagine that if you fail at an ESG risk, it's sort of hard to get over that because there are a couple of layers that they still have to achieve. Compare that to a large cap company that already has all these ESG controls in place, and then they failed one. You'd expect that they already have sort of like a risk or compliance department that is already trying to address those concerns. Also on the portfolio level, volatility and liquidity is taken into consideration in position sizing. So how large our exposure is going to be. We look at days to exit, the value at risk. If we do put a large position in a highly volatile name, those are already taken into consideration. Just to give your viewers context, of all of ATRAM's equity strategies, Alpha Opportunity is already the most forgiving in those metrics.
Yeah. So, Elle, I guess just to connect it with the experience of our investors, based on your observation, the kind of stocks that the fund is investing into, would you say that they are more volatile than the blue chips or not necessarily?
Yeah, they really tend to be more volatile than the blue chips. That is something that's to be expected. Since usually what's embedded in our strategy is that first, these companies tend to be undercovered. So there's a lot of mispricing there. It's not a lot of information out. But then once large institutional funds or even foreign funds take notice of the name, it leads to a rapid re-rating, right? Or rapid de-rating. It can also go to a de-rate if it was actually viewed negatively, right? So you can imagine the volatility that comes into play once all of these factors come into play.
Yeah, so having said that, and pairing it with all the benefits of your investment process, the possible outperformance that it brings, how should a client look at the ATRAM Alpha Opportunity Fund when he is deciding to invest in the stock market, or he has a portfolio, he wants to put it in a fund? Should he put everything in ATRAM Alpha Opportunity Fund? What do you think?
Okay, so it really depends on your risk appetite. And Alpha Opportunity tends to be for those investors who have a more aggressive risk appetite. Or even if you're not aggressive, you are willing to take on more risk in your portfolio already, right? So you're already invested in pretty less volatile instruments. So you have your fixed income, you have your bonds already, you have your index funds, and then you want to provide more upside to that. Alpha Opportunity is one of those products that you can consider. It's an excellent choice, right? This is also for investors who are more savvy into looking for the next big thing. That's always what you want to catch. That's essentially asking which company is going to be the next blue chip, the next index component. And if your goal is beyond capital preservation or beyond income generation, because this is more growth oriented, so the companies tend to not give out a lot of dividends, right? So beyond capital preservation or beyond income generation, Alpha Opportunity is an excellent choice.
Great. I think that will help clarify the decision making of clients or investors who are looking at this fund, Elle. Now, I'd like to move forward, Elle, from how we understand the investment process of at the fund. Can you walk us through the kind of market environment that you see from here on, and how does the current environment in your outlook affect, if at all, the way you are managing the ATRAM Alpha Opportunity Fund right now?
Before I can discuss what our outlook is, it's important we put everything into context, right? So let's just look back on what has happened so far. So and we put it in the context of the market performance, the PSEi performance. So we've seen the first ECQ lockdown back in March, which led to the PSEi nosediving, right? And then we saw some optimism in the move to GCQ, which is looser restrictions. So that allowed some restaurants, that allowed some malls to operate. And then we started loosening restrictions again. And then we saw some resurgence again in August. So we reverted back to ECQ. So we have been in this cycle of going to GCQ and then going tighter restrictions again. But not all ECQ were made the same, right? The first ECQ, there was totally zero restaurants, and it was just the essentials. The other ECQ, you already have some restaurants adopting to the current environment, and takeouts were allowed. But something that we didn't have in 2020 was vaccination. We saw a peak of 700,000 vaccinations per day. That's the rolling average. Now we're also seeing an increasing number of fully vaxxed people, and we expect this trend to continue to rise. Now, what did we see in earnings? Companies reported their earnings sometime in late July to August, right? We saw second quarter earnings rise by 335.4%. Now, this might seem really high, but may I remind you that we were also coming from a really low base in second quarter 2020. And this brought our first half earnings about 84.5%. Just to give you an example, if your earnings declined by 80%, you'd have to quadruple your earnings just to get back, right? So that's what we're looking at. 84.5%, how does this look compared to our full year 2021 earnings? This does seem high, but we expect some tapering in the second half, down to our 30% expectation for the entire year. One of the more important components of our market is foreign fund flows, right? And we had 17 months straight of foreign outflows until August. August was the first full month of foreign net inflow. Right? So when you look at the foreign ownership of our companies, they're at multi-year lows.
Yeah. So Elle, just talking about the foreign flows, I'm just interested. What do you think will it take for these foreign investors to really come back in a sustainable manner? For all we know, August is just a blip, but what do you think is the catalyst?
It really is the macro situation of the Philippines. Since when foreign fund managers look at the Philippines, it's being looked at a basket. So together with its Asian neighbors, right, ASEAN neighbors, basically, or even emerging market neighbors, and our vaccination metrics, our cases, don't really inspire that much confidence for those foreign fund managers. So those metrics have to get better. So we have to be on the path that our government set out. 70% vaccinated by the end of the year, which is their threshold for herd immunity. We have to be on track for that. So far, we're not really on track for that yet. Our cases have to come down. Those are just the health metrics. We're notwithstanding the macroeconomic metrics that they're looking at, right? So all of those have to align just so the Philippines has to stand out relative to its ASEAN neighbors or relative to its emerging market comparisons.
Yeah. So bottom line, L, what do you see for the local market? Where are we headed going forward?
So we still have short-term headwinds that we have to navigate, right? We entered the year kind of optimistic, and two reversions to ECQ kind of sobered us up, right? So we're still navigating short-term headwinds. Bank non-performing loans are trending in line with expectations, and those expectations are already getting better. So that's a plus side, right? But we're still not totally out of the woods yet. Inflation could be another factor, since, like, for example, last year or even the past few months, we had a lot of factories shut down, right? And then suddenly you had demand spiking, so now you have a shortage of supply, right? And then mobility restrictions, that's still a recurring theme for us right now. What are the sectors that we're kind of okay with, and then what are the sectors that we're kind of negative, right? And we do emphasize our caveat here that we focus on the quality names in these sectors, because you would see property conglomerates, airlines, right? Just from those three, you can have an idea that we're already positioning ourselves for recovery, because we still believe in the recovery of the PH economy, and that it's just a matter of time, right? So the quality names in property, quality names in conglomerates, airlines, port services is something that was very resilient and is still poised to grow really well post-pandemic. Again, the new economy and ESG names that we're looking at, consumer discretionary, so that includes restaurants and department stores. Infrastructure, now that the large ticket infrastructure projects are about to be bid out before the prior elections. And then gaming, something that will be coming from zero and then just ramped up as gaming demand comes back. We're kind of neutral with banks because of the non-performing loans that we're still looking at. And then underweight telco, power utilities, and consumer staples. Now, this may seem contrary to what the names that I discussed before, because we're still very selective within these sectors. In terms of earnings, so we saw a 44% decline in core earnings in 2020. We expect earnings to rebound by 30%, as you may have seen earlier, and then further up to 43% in 2022. Now, this is already considering the addition of ACEN and Converge into the index. And then in terms of PSEi target, this year may seem kind of flattish, only 7,300 by the end of this year. But we think that the rebound will be back-ended towards 2022 at 8,700. Now, again, our 2022 index target is also under review. This was prior to the addition of ACEN and Converge.
All right. So, given all these house view that you have, Elle, and perhaps learning from the success of the ATRAM Alpha Opportunity Fund, what can you tell to investors who are right now having a hard time navigating this kind of market? Because as you may know, the broad index, the PSEi, is still down year to date, right? And there are clients who are in a losing position. So what advice can you give to these guys?
I mean, it's really a matter of confidence, right? That the Philippine economy can recover. And I think, the house view, or we're still very optimistic that the PH economy will still recover. There will be a name or two that will come out stronger in certain sectors, in certain spaces, new names coming out, right? From what we've seen in the past few months. So just from that, you can see that there's still a lot of businesses out there that are thriving. There are businesses out there that are very innovative and already adopting to the current environment and already anticipating that we might not really be back to the pre-pandemic environment. And the companies right now have really large, comfortable balance sheets. So once we see consumer confidence pick up, we see business confidence pick up. So it's just a matter of time. Once that inflection point comes in, we might be kicking the can down the road because of resurgent cases, but we're already seeing a pickup in our vaccination rate. So that still inspires confidence in the recovery of the Philippine economy. If you're an investor that's kind of fearful in entering in this kind of environment, Just do your homework. Look at the companies that have taken care of their own employees and their own stakeholders. That shows, first of all, compassion. And second of all, that shows capacity to take care of their stakeholders and then take care of their business and then bolster up their operations and emerge stronger. So just do your due diligence in these companies.
All right, very well said, Elle. So, ladies and gentlemen, don't lose confidence. No? So,
Yes.
on that note, we'd like to thank you, Elle, for walking us through the investment process, investment strategy that goes into the ATRAM Alpha Opportunity Fund, and for sharing with us your insights regarding the prospects of our local market going forward. So, thank you to all our viewers. As you might have learned from our session, not all equity funds are created equal. They have different strategies, they have different investment process, and choosing the right fund will help you achieve the kind of returns that you want. So if you want to learn more about the ATRAM Alpha Opportunity Fund or any other mutual fund available through our platform, just log into your COL account, visit our website. You have all the information there that will help you choose the right fund for yourself. Thank you once again, and we'll see you all next time.